Yo, what's up guys? So in this lesson we are going to learn about inducements or liquidity engineering, right? How the market makers can actually induce you into the market, right? So you should actually know when not to just jump into the market before price actually gets maybe into your point of interest or zones of interest, right? Don't be induced into the forex market, right? Because the big guys, they're going to form inducements in a way to create liquidity, right? So don't be part of the liquidity, don't become the liquidity yourself, right? So the moment you see inducements, you know that this is just liquidity engineering, right? You don't get part of those trades. You just be patient and wait for price to come to your zones of interest, then you get what? Then you get to trade, right? So for example, in a downtrend like this is what is going to happen, right? You are going to see that the market will create a BMS there to the downside, right? After creating the BMS to the downside, right, when it actually starts to correct, right, like always, we are going to be using our premium and discount zones, right? Remember, we take trades that come in the premium zones if you want to sell on, right? So the market, what it's going to do now is going to do this usually before the 50% zone, right? Usually that's where they're going to induce many traders there, right? So they'll correct, right? As they correct, they'll start to drop like this, right? So many people will be fooled to actually join into the market in such zones, right? Before your discount or your premium zones, before your premium zones, it sells discount buys, right? You start to join the market there, right? So they will drop a little bit before that 50%, right? Or at times they can even get into those zones, right? So they get to drop like that. Then you are induced. You jump into those trades. You're thinking price is reacting to this flip zone or support and resistance zone, right? Or maybe a breaker block, right? Maybe a breaker block, but it's a breaker block before 50%. So if it is a breaker block before 50%, we don't take such breaker blocks. We only consider to take breaker blocks that happen in the zone above 50% in our premium zones, right? So the market is going to induce traders. Many people are going to think it's going to sell. It's now selling, right? And what usually happens to traders, the moment we see the market dropping in such zones before our zones of interest, right? I don't know what happens to us, right? We get to jump into such trades, right? We think we're being left out, then we start joining, right? So such move will be inducements. Don't fall into this trap, don't fall into these inducements, right? So what you simply have to do, you have to wait, because when they are inducing traders there, they're creating liquidity above this, right? After creating this liquidity, they're going to trap it, right? So you don't have to be part of the liquidity, right? So they're going to trap it. After they trap it, now they come to our supply zone, then then they're going to fall like that, right? So it means this zone is a zone of what? It's a zone of what? Of inducement. This is just inducement that was happening there, right? Inducement or liquidity engineering, right? That is just happening in that section, right? So don't be part of this move, right? What we're going to wait for is for our price to come into our premium zones. After it gets into the premium zone, then we just wait for price to get in our supply zones as usual. Then we get what? Then we get to sell, right? So this is inducement. Don't fall trap or don't fall victim of such moves, right? So in an uptrend, it's just the opposite of this, right? If you can just draw it for the sake of others who might have challenges in understanding what I'm trying to say, right? So the moment breaks this previous low, that's a BMS, right? So after creating BMS, they're going to correct, right? So as they correct, right, take note of the premium and discount zone, right? Before they actually get to that zone, at times they can do this, then they start moving, right? Many traders or retail traders will be like, they are respecting this support zone, right? They're respecting this flip zone, right? So this is just an inducement to us, right? This is just an inducement, right? So know this pattern, right? Then what they will do, they'll just grab the liquidity that was created here. So it's more like liquidity engineering. They will grab it, come now to our discount zone, right? After they reach our discount zone, they respect the demand zones there, then they are going to buy. So know this pattern. I thought it's very important for me to actually share with you this important pattern that I've seen protect most of my trade, right? Avoid these traps, right? So price is going to come into the demand zone there. When it comes to the demand zone, then you strike, right? So this move is simply an inducement, right? Or liquidity engineering, like I've said before, right? So don't fall victim of such a trap, right? So this pattern, get to know it and get to use it, right? So let's go to the chart and get to do some examples on this concept, right? Then on another note, right, the only breaker blocks that we're going to use, sorry, I have to do a video on that on the next video, I think, right? So the next video that I'll do, I'll talk about the breaker blocks that you can actually use, right? Which breaker blocks to actually consider. I was about to explain that now, right? So let me just leave that and get to the chart, right, and explain, right? Okay, so to start with, I'll use the example that I have here on USD, right? The example that I've seen here on USD. So on USD, what actually happened? Price actually broke this one, broke this very high, right? So this is actually a BMS. We can also see that that's just a break in market. What? That's a break in market structure, right? So the moment you see a break in market structure there, when the price starts to correct, right? When price starts to correct, like we said, the moment you start to see the price is now correcting, what you have to do there is to, sorry for that. Okay, so when price starts to correct like that, right, this is what you're going to do. You do your premium and discount, right? You take your 2 there, right, so that you can see, right, so that you know your equilibrium zone, right? So this is your equilibrium point, that 50% zone, that's your equilibrium point. Let me just stretch it to the left like this, right? So that's your equilibrium point, right? Anything above this zone, we're not going to take buys, right? So you see this block that is lying there, if price reaches that, we're not going to take that buy, right? We only consider buys that are happening below this zone, right? So it so happens that we have important zones that we have. If you look at this zone, this is we have a breaker block that we actually have there, right? So we can actually use that breaker block is our first zone of interest, right? We can actually use that breaker block as our first zone of interest. Let me take, it's a long trade, right? You can use that breaker block as our first trade, right? So this is what you're going to do, right? And we're not so greedy. We're just targeting these highs or even a little bit into the zone. We don't put on the highs, a little bit into the zone, right? Stop loss slightly below that, what, that breaker block, right? That's our first zone of interest. And as for me, because this breaker block is almost in line with this, I'll just ignore this. I'll take this as liquidity. If that one fails, then I'll expect my price to actually come to these lows, right? Because I see this as some diagonal liquidity or trend line liquidity. So I wouldn't consider this what I would consider as zone, right? So what I will do here is this, right? I'll expect another buy in these zones. These will be my 2 zones of what? 2 zones of interest, right? This one will be the best trade because it is a high reward, right? But it doesn't make us leave out this opportunity, right? So now we want to see how price will actually play out there, right? How they'll induce other guys into the what? Into the market, right? So you have to know your zones, right? So before price gets into the zones and they start rejecting like this, right? Price hasn't gotten to this zone. They've just tapped this region, right? Then they are rejecting like that. Guys, don't be induced into the forex market. Don't be forced to jump in the market, right? Don't fall prey of this move. This is inducement. This is what we're explaining is what is inducement, this move, right? So it's liquidity engineering, right? That's liquidity engineering there, right? So you can call it inducement or liquidity engineering, right? Like that, right? So that's just liquidity engineering. You have to be patient for price to actually come into your zone, right? So if you're patient enough, price is just going to do that. It's just going to come into your zone. You have to be patient, right? Then the moment they get into the zone, now you're looking for a confirmation, right? I'll explain this. I think I explained it in the previous videos, how you act when price get into your zones of interest, right? But then I think I'll have to do that once again. Then you confirm and your trade will move into profits and you hit your take profits like that, right? So this is it on this USD page. Continue to go, but then we are done. We have our targets. You just have to stick to your target, your stop loss, ERC, right? So done with this trade. Let's get to study another case study that we have, right? So this is for a bullish trend, right? And in this case, we actually use the breaker block, not really another block, because price didn't actually come to this zone, right? It actually left that. When price is coming back to these regions, we are now targeting this other block because there is a PMS there. Then we'll trade it like that, right? So let's do another pair. Let's do another analysis on this concept, right? So let me start here, right? Upon seeing that we have a BMS there, and price is now what? It's now correcting there, right? Price is now correcting like that, right? This is what we do, right? Our steps to analysis, I think I've actually given you how we do this analysis. Premium and discount, that's the second thing, right? So this is a discount zone, right? So anything below the discount zone, we're not going to take those trades, right? If in our breaker block there it happens to be on the equilibrium zone, right, I'm just going to ignore it in this instead, right? So the order blocks that I'll take, I'll consider this as my first order block or my first supply zone, right? Then we also have the extreme one. This one I'll call it, I'll consider it some liquidity there, right? There is a small trend line around this region, that's just liquidity there, right? So anything that is going to happen before my premium zone, I'll consider that as inducements, right? So let me just play this out and we see how it happened, right? So if you look at this point already, they had pushed up, right, before our zone, right? We see that we had what? We had inducement there, right? We see that we had inducement there, right? So this is inducement that they did there. Let me remove this because I think we now know our zones. Let me just put it to this end, right? So this is inducement that is happening. Don't fall trap, right? Don't think that you are now missing the trade. So long they haven't got to the what? To the premium zone, right? Then this case, this is inducement, liquidity engineering. You can see they now pushed up, they took more liquidity there, but still they didn't get to a zone of interest. So that's more of inducements that were actually happening there, right? But then finally price came to our zone, right? Mitigated that order block, then we got our sell. So it means our sell opportunity was actually supposed to be in this region, right? In this first region, then this was our first sell trade, and we're going to win on this one. Like we see price was slow to do that, right? But then price flowed into our direction and we are hitting our profits there, right? So this is the first inducement example that we had there. I think if you follow the trend again, we'll be able to catch some trades again, right? Upon seeing that with our PMS, you just follow your trend, right? The trend is your friend, right? So after seeing that our price has created that PMS, right, all you have to do here is this, right? All you have to do after seeing that price is created a PMS, it is broken the previous low there, right? It's up to create a new low. You wait until your price starts to correct, right? You have to see that the correction is now in motion, right? You have to see that the correction is now in motion, right? And every correction should be at least 50% should actually come to premium. Any correction that doesn't get to 50% of the impulse move, you don't do anything, right? Small corrective moves that don't go 50% of the move, you don't do anything, right? You wait for a corrective move that is at least 50% of the impulse move. What I mean is this. Let me stop here, right? What I mean is this is a small corrective move. We will actually consider this. And when you see a BMS here, this high being broken, we don't really consider this. One correction that comes at least 50% of this impulse move. So this small corrective move, we will just ignore it like that, right? That's how many people are trapped, right, or induced. For example, on this very zone, many people are also induced. That's more like an inducement again, right? So on this one, at least when you see price is now correcting, clearly you can put your premium and discount. You can put your premium and discount. Maybe you'll have tried it here, tried it there, but it didn't reach 50%. So you just ignore it. Then you put it from this zone to that, right? So after pushing it like that, you're going to realize that, oh, above 50%, I have a breaker block. Interesting. This breaker block, right? Then it's also in line with these what? With these zones, right? So you can just consider that breaker block along with this supply zone, right? So that zone becomes a zone of interest, right? It's now a key zone, right? It's now a key zone, right? Then you can actually map your trade like this. This is a short trade. Then you target this these laws, right? So what actually happened here? How did they trap traders, or how did they create inducement? So this was what? This was actually your zone of inducement. All right, that is inducement, right? I can't write that in few. So this was inducements or liquidity engineering. It's just a fake move to trap many traders, and many traders fall victim of these moves, right? So this is inducements or liquidity engineering, right? Any corrective move that happens and fails to reach 50% of the impulse move, right? For example, if you're taken this zone, right, maybe you're thinking this low, then they correct but fails to reach 50%, then you know that that's not a corrective move. That's not the corrective move, right? They're just inducing traders there, right? So you just leave that zone till you get a corrective move that is energy, right, that can prove to reach, or that shows you that it can reach 50% of the impulse move, right? Then you can trade now, right? So from this, you had to be patient, right? Let's be patient. Then they've actually tapped the zone, right? So the moment they tap the zone, then this zone is now significant, right? We can stretch it to the right, right? You are now going to a shorter time frames. You're looking for your confirmations. Get your confirmations there, then you snipe your trades and you wait to see if it's going to win or it's going to lose, right? So I'm glad here, if you look on lower time frames, price actually broke this low. On lower time frames, this will be a BMS, then they correct. So I believe the entry was actually there when they came back to this very order block. Then you actually take your sniper and there, and I believe you see profits immediately. Like, wow, this is what is actually happening now. They actually came back for the second time, then boom, you hit your profits like this, right? So as you be trading in the upcoming week, or in your trading career, try to apply these concepts. Just do your analysis as simple as I have been doing here, right? It's just a simple procedure in doing your analysis, right? But I'll encourage you mostly on currencies. If you try to take this to derive, then that's the own story. Personally, my personal experience there on applying these concepts, derive, I've seen flames, right? Till I decided no, these, I'm just going to stick to currencies, right? So I believe you've learned something in this video. Just drop a comment in the comment section if I've helped you on something, or if I have left something that you think I have to cover with more explanations on the other videos to come. So let's communicate in the comment section. If you feel like you want to inbox me as well, get more information of how we trade and our trading platforms, you can actually send me a message on my WhatsApp or my Telegram, right? The links will be in the description below, right? So thank you guys for your time.